This whole accelerated computing and AI movement drags the whole semiconductor market and industry kicking and screaming out of the depths of the down cycle from the last couple of years.
ASML, the EUV lithography monopolist. Let's talk about them. How'd they do this quarter?
I'd say they did pretty good this quarter. It wasn't a knockout performance, but it was pretty good by some measures. The only problem is everybody knew it was going to be a pretty decent quarter. So the stock price has run up quite a bit already this year. It appears that price run up is holding for the most part over in Europe as we record this segment where ASML shares trade, obviously, because that's a Dutch company. Maybe just a quick recap here. We bought a full position in this company back in November 2022, not long after we started the Chipstock Investor YouTube channel. Big question then, is it too late to buy?
Before we answer that question, we have a link for 15% off of finchat.io. You can find that in the description below. We've been using finchat.io to analyze all of our positions and new companies. Really powerful AI tool that you can use as well for charting and analysis. Check that link out in the description below. If you haven't caught it yet, make sure you go and watch our video on small cap company error test systems. In that video, we talked about that auto and industrial part of the semiconductor market, which is on the bottom there. But for this video, for ASML, we're going to be talking about the top line, AI infrastructure. It's a new market. We're still in max growth mode.
Yeah, really interesting. The previous decade that got ASML to this point, one of the world's largest industrial companies, obviously one of the world's largest and most important semiconductor companies. What got them here to this point was the consumer electronics part of the market, specifically smartphones, the shrinking down and increasing power and performance of those ARM-based mobile processors powering all of our iPhones, our Android devices, and so on. But we're in a new era now, lots of AI, or maybe I should say, accelerated computing infrastructure needed in the next 5 to 10 years. And so, of course, ASML happy to facilitate the build out of that infrastructure using more advanced chips.
The last couple of quarters for ASML, this was the big news in leading edge semiconductor manufacturing. The NXE 3800E system is the latest and greatest EUV machine that ASML makes and will be used in the leading foundries such as TSMC, Intel, Samsung. In addition to that, ASML also shipped its first EXE 5000. Intel took delivery of that earlier this year. That is not in production yet. Intel is currently working on getting that amazing machine up and running. So we'll have to stay tuned on what that actually produces. But this NXE 3800E is what is being used by Intel to get to the 2 nanometer node in semiconductor manufacturing.
Yeah, and this is still a developing story. Intel in a race to get to that widespread 2 nanometer process production first, hoping that the NXE 3800E system gets them there. TSMC a bit more cautious in adopting these machines, looking at other methods using older ASML equipment and using multi-exposure processes where you scan the wafer multiple times with some of the older lithography equipment to see if they can get production up and running without having to shell out the extra money for these. Remember, these latest and greatest EUV machines were looking at 250 million, 300 million, and more per machine. And then when we go into high NA, the EXE 5000 series, we're looking at 400 million and above per machine. So Intel shelling out lots of cash for these, everybody else being a bit more cautious in adopting them. But nevertheless, the point is, this is what investors have been focused on. Here's the actual reality of what's happening for ASML right now in 2024.
ASML said actually that their outlook remains unchanged for the full year 2024. They still continue to see 2024 as a transition year as they have this ramp in both capacity and technology. What that ultimately means is that revenue for 2024 is going to remain flat with 2023.
Now, what has investors really excited, though, is as we scale to more advanced chips in support of things like accelerated computing infrastructure, we're starting to look at what could be really significant growth for ASML in 2025. That outlook for 2025 also remains unchanged. They actually provided this all the way back in November of 2022. They have this very broad range, 30 billion to 40 billion euros in revenue expected next year. So if 2024 revenue ends up being about the same as 2023, 27, 28, 29 billion euro, that means 15% or possibly significantly more revenue for 2025. Kasey, run us through the Q2 2024 numbers that gets us to this outlook for the current year and for next year.
Net sales for Q2 came in at 6.2 billion euros. That is a 9.5% decrease year over year. Earnings per share came in at €4.01, which is down 19% year over year. Free cash flow came in at 386 million euros versus negative 161 million euros in Q2 of 2023. Net bookings for this most recent quarter were 5.6 billion euros. That includes EUV bookings of 2.5 billion euros. That's around 3 EUV bookings last quarter and 10 or more this quarter. Bookings mean companies have placed an order for these machines, but they haven't taken delivery yet. And so we expect that income to come in to play in coming quarters.
And that 5.6 billion euro in bookings is a big improvement. Remember, last quarter, only 3.6 billion. Management was pretty adamant in their belief that those orders were going to start rolling in again as 2024 progressed. So we see an early significant increase in Q2. But if we're going to see that really dramatic growth in total revenue for ASML in 2025, we're going to need to see an even bigger recovery in equipment bookings during the second half of this year. So keep an eye out for that when we get the Q3 report in October and then get the Q4 report in January of 2025. But ASML, so far so good, delivering on the numbers that they said shareholders should expect. As the semiconductor industry recovers, this whole accelerated computing and AI movement drags the whole semiconductor market and industry kicking and screaming out of the depths of the down cycle from the last couple of years. This is where things are moving, folks. And so far, these are positive signs.
AI and accelerated compute is not the only thing that has been keeping ASML afloat during this quote unquote transition year. China has made up 49% of sales in Q1 2024, and then this most recent quarter, Q2 2024. You can see in that top pie chart, the rest of the world making up the other 51%.
And this is important to continue to call out because this is a significant risk. As we get closer to 2025, we would expect that more of these lithography bookings, especially for EUV machines, to pick up pace and pull some more weight here. Of course, the EUV machines are off limits to China. And the big risk here is that as China continues to try to build out its own domestic chip making industry, there's still ongoing continuous talk that the US, the Netherlands, and others are going to clamp down on what China can purchase from ASML and the other Fab 5, Applied Materials, Lam Research, Tokyo Electron, and KLA Corp to throttle their own AI system and accelerated compute development. This could be a potential headwind for ASML as it tries to stay on track to meet those new revenue records in 2025. It's a big piece of the pie.
We continuously focus on where we are in the cycle. And for ASML, the cycle has already reached bottom, and now we're on our way out of that cycle. Take a look at the valuation notes from April 2024. At that time, the share price was around 875 euros per share. It was at 48 times trailing 12 months earnings per share and 133 times trailing 12 months free cash flow. Fast forward to today, where ASML's share price is nearly back to all-time highs. It's currently at around 920 euros per share. What does that tell us about the current valuation?
The elevation is high, but let me cycle back to the previous slide that you reviewed, Kasey, on earnings per share and free cash flow. You mentioned the cycle bottom now appears to be in the past. Earnings per share were down, free cash flow coming out of the trough. As you mentioned, ASML, some new capacity to handle this expected influx of customer machine orders and deliveries. So we're going to start to see, keeping the share price equal, let's assume the share price stays the same at 920 euro per share. Starting in Q3 and in Q4, we should start to see improvement in earnings per share and free cash flow. Remember, last quarter, free cash flow was deeply in the red, in the negative. So as we lap those depressed results, these valuations will improve. That being said, though, the earnings per share multiple is elevated, even though we are coming out of a bear market. So this is why, for us personally, we're happy to hold what we have in ASML, but we're not adding any more to our position.
Yes, exactly. We're more than happy to hold our position in ASML, and we are long on ASML stock. We have no intentions of selling our position. And if you're not an investor in ASML currently, it may be a good time to consider a DCA plan at this stage.
And the reason that yeah, on a backwards looking basis, the valuation is expensive. Remember, this is an industrialist. It's tied to manufacturing. They had to expand their manufacturing capacity to facilitate their customers. And so as they come out of a cycle bottom, the earnings per share and free cash flow growth can get very dramatic. It would not be out of the question to see something like a doubling in free cash flow, or much, much more than that on a year-over-year basis as we progress through the next year, year and a half. Remember, again, free cash flow in Q2 2023 was negative. We flipped back to positive in Q2 2024. Elevated valuation creates some stock price volatility, thus the sell-off after the earnings update. For investors that kind of missed the bottom in the stock over the last 2 years, that's why we think a dollar cost average plan tends to make sense.
Just earlier this week, we did an update on Onto Innovation, one of our favorite small cap companies that we added to our basket. It's definitely more of a mid cap by most metrics, but this company also has some lithography equipment that works on the packaging side of the semiconductor manufacturing process. Make sure you check that out. It's an interesting play. We actually asked the question, is Onto Innovation the next ASML? That out, link right here.
Definitely. If you want to nerd out on semiconductor manufacturing, got to know the whole process flow at this point. It's not just about the wafer development anymore. ASML is going to continue to be a dominant player in this industry for many years to come, but I'm not sure that we'll be able to continue calling it an absolute monopoly for forever, because we've made clear, hopefully by now in some of our other videos, this is a highly collaborative industry. ASML relies on a lot of other companies to help its customers make advanced chips. And I think that trend is going to just continue in the years ahead. There are a lot of opportunities for other smaller businesses to get their foot in the door.
All right, make sure you check out our Semiconductor Insider, just $5 a month over on Ko-fi. That membership gets you access to all of our show notes, published manuals, Discord access with a great community, and live Q&A events over on our Discord channel. Earnings season rolls on. See you all soon at Chipstock Investor.